Okay, so this is the 10-year yields, and we'll pull up the weekly time frame. So in the 10-year, let me just bring over this timeline so you can see fairly clean cycles on the weekly. This is a 19 bar cycle. Just zoom out for a second. You can see this has been really solid for multiple years here in the TNX. Now, first thing we have to note is we have seen a lower low versus that old low. That says that this is likely a major high that has formed in the 10-year. We are curling back up. This test of the low did not get a violation, and then we hammered off of that. So that says that this is a good low now at 37.85. We're looking for this to turn back up as it's doing, and likely trade just a bit higher because we're looking for still really one more wave down in both the notes and the bonds. And what we're looking for is just another really few weeks here on the upside in yields prior to seeing a high form, and then for this to turn back down. This is a zone right here from 43.87 up to 45.39, so that's 4.387 to 4.539, okay, here in terms of the actual yields. A low that is due 422 to right around 6.3. If we jump over to the daily chart, so we aren't seeing any breakdowns in the cycle structure. This is a higher low, not an ideal base because it didn't hold the 78.6. Let's just draw our fibs in from cycle low to cycle high. You can see it did have a slight move on a daily basis below that 78.6 at the 38.73 or 3.873 level. And then we have obviously turned up. So here on that small flag right there, we watched for a long side move here in yields and a short side move in the bonds. Obviously, that did play out nicely as we have turned up. Right now, we are watching for a short-term peaking phase to get underway here, then to get a bit of a pullback. So that would therefore imply a pop coming in both the notes and the bonds, right? So that is really what we're looking for based on the daily timing, which I'll show you in a second. So all this is lining up quite nicely for a pop lower in yields and a pop higher just for a little bit here in both the notes and the bonds. But based on these cycle structures, higher cycle highs, higher cycle lows, we're looking for still yet one more move higher here in yields prior to forming an important peak on the intermediate term and short term in the yields, and an important trough in both the notes and the bonds. These levels are all rising, but currently it's 41.46 to right around 40.24 here, which with a low, as I said, is due 3.8 to right around 3.21. Okay, so we are right now acting fine in yields. We're watching for a short-term peaking phase, however, to get underway. So with that in the background, let's try to understand what's going on in the notes. So this is the notes. These are the weekly charts right here. You can see that there is a low that is due 2.5 to 4.1. There is a very likely shift going on based on that breakdown in that weekly cycle structure in yields, that we've seen a shift in this dominant money flow. This was that dominant money flow. So we've shifted left the length of a minor cycle to show that this was very likely an important longer term low here in the notes. So we are looking for still one more hit down, as I said earlier, here in the notes prior to forming that trough. And then we'll be looking for it to turn up afterwards. There's a low that is due 129 to 41 here in the ZNs. Jump over to the daily chart. So there is a daily low that is due right around now. You can see that right there on that minor half cycle, 222 to 35. Still have a firm downtrending slim ribbon that is in place here. What I want to do is go ahead and just bring in our fibs here so you have levels. So we would draw it from that key swing high right there to the recent swing lows. And you can see the levels right there, 110.245 to 111.225. Rallies into that zone are likely to fail, and we'll be looking for a move down. So as I said, we're just looking for a short-term low to form and get a bit of a pop higher in the notes and a bit of a move lower in yields, but that is not likely to be lasting, as we are still looking for one more move down in notes and one more move up in yields. Our next trough here is due right around the 4 or 5 time period. So that is when we will look for an important peaking to go on in the yield market as well. Okay, so that is how we understand our sense of timing. Key to really understand what's going on in yields, in addition to both the notes and the bonds, to have some conviction on that timing. So that's why we are looking at both of these markets.